Well, guys, at this point, I don't even know what to say anymore. It's painful. This market is, it's bad, okay? Let's put it that way. And, it's not bad as in the usual way of bad, meaning like it's going down. It keeps going up and it's bad, okay? S&P 500 is somehow up today. Nasdaq's up another 1.1% here today. Coming from somebody that has the majority of their wealth in the stock market, I'm here to tell you this is bad, okay? This is bad. That's like, it's just ridiculous, okay? And here we are, like, let's just go back to sleep. We're like, will this ever happen? Will the stock market collapse, summer 2020? Is it gonna happen? Or are we just gonna keep going up and up and up? What is going on with this market? Nasdaq's now only down 0.7% year to date. Think about that. Think about, like we're going to go through a lot. I don't even want to get into that right now, but just take that into context. The Nasdaq is almost at break even for the year. Who would have thunk it, okay? The S&P 500 is only down 11% for the year. Only 11%. Now, most years, I understand 11% would be like, dang, this is a rough year. What the heck's going on? But with the numbers we're going to look at in just a moment, 11% is like, if you had to tell us, like, we're only going to be down 11%, you'd be like, take that. Let's take that, okay? It's extraordinary, okay? There are two things I really want to discuss in today's video. The first thing is, why is this market holding up so well? There are three core reasons why the stock market continues day after day to hold up pretty dang well. Nasdaq being right around break even, S&P 500 down only 11%. In my opinion, that is a win for the stock market. Like, just flat out, when we look at some of these numbers, it's a win. But why is this specifically happening, okay? I put a lot of thought into this, and I'm going to go ahead and share why exactly this is going on, okay? The second thing I want to talk about in this video here today is, what will it take to break this stock market? What will it take to finally get a stock market collapse going and get the stock market to just go down and down and down and down, just downtrend for several months or maybe even a year or something like that? What will it take, okay? And I'll give you my opinion on that, and then I'll throw in a little bonus, and I'll give you my opinion on if you should short stocks out there or do anything like that, okay? No, yesterday's video, just trash, okay? I must have let you guys down because that video didn't get many views, and you guys let me down. It only got 2,100 thumbs up, okay? But you know what? Let's just forget about yesterday's video. Let's just forget it even existed, okay? This video, I think we can hit 2,118 thumbs up in the first hour it is out. That would be a new record in the history of the channel. Can we do it? I think we can, and let's freaking accomplish it, okay? Let's accomplish it, and let's hit 10,000 within the first 24 hours. I think that's possible. That would be a record as well, okay? Let's get started, okay? So first, I want to start with the facts. Before I give you anything about my opinion on this, I think it's important to start with facts, what is actually going on, the numbers in themselves, because men lie, women lie, numbers don't lie at the end of the day. And then I'll give you my opinion on why the stock market is holding up so well, okay? So, real unemployment rate soars past 20%, and the U.S. has now lost 26.5 million jobs. These numbers were as of April 23rd. It's gotten worse since then, okay? Today's May 6th now. Numbers have gotten worse. Real unemployment rate has gone up since this article came out, and the job losses now, I believe, are over 30 million at the moment, okay? Those are some facts for you. Look at this chart that shows you weekly initial unemployment claims in 2020, and they have just gone to levels like we've never seen before. I mean, we've never seen these levels ever in history, just ever in history. Like, this is just, it's extraordinary, the amount of unemployment claims that are going on right now. And the thing is, it's still pouring in. Yeah, it's not quite as bad, but the numbers are still pouring in. It's still going to be really bad this week. It's still going to be really bad next week. And so it's not like it's over and it's like all the unemployment claims have already come in. No, the numbers are slowing, but they're still pouring in. It's still in the millions and expected to for at least the next few weeks. And so that's just, the numbers just speak for themselves. It's like something we've never seen. 30 million Americans have filed unemployment claims since mid-March. That's just ridiculous. I mean, no one could have ever predicted this. Even in any type of scenario where you thought there could be a recession in 2020, no one could have ever predicted 30 million Americans filing initial unemployment claims in about a month and a half span or 2 month span. Like, it's just, that's just ridiculous. It's ridiculous. It's ugly, okay? Now, it's not just that these numbers are coming out. It's really, you got to pay attention to, like, what are some of the biggest, strongest, mightiest companies that have the best insights in the world? Like, what are they doing? What are they actually doing, okay? Google to cut marketing budgets by as much as half. Directors warned of hiring freezes. Google McDougal, one of the most profitable companies in the entire world, the best balance sheet company in the entire world, a company that will expand regardless of recessions, is going to cut down massively on hiring. That is extraordinary. And when you hear something like that out of a massive company like Google McDougal, who once again has the best balance sheet in the world, you gotta take a moment to just think about that and just let that process. Like, Google's doing this, not the local restaurant. Google, okay? Microsoft, they've been flirting with kind of being the biggest market capitalization company in the world, right? They've been kind of battling it out with Amazing's on and Apple, right? Look at Microsoft job listings. They have plummeted through the floor. Microsoft is essentially saying, we don't need that many employees right now. We're not going to hire aggressively right now. Like, that's just, it's falling through the floor, literally. Microsoft's like, we're good, okay? They've cut back on nearly 50%. 50% of job listings in just the past 3 weeks. And it's continuing to downtrend in terms of Microsoft job listings, a company that is actually, a lot of people are looking at it right now and they're like, this company's benefiting. And yet they're cutting down massively on hiring, okay? Apple, I mean, the most profitable company in the entire world, right? Apple is basically has hiring freezes for most of their business outside of hardware, some hardware jobs, machine learning, and artificial intelligence. Outside of that, they have some hiring freezes on right now. This is Apple we're talking about, okay? The most profitable company in the history of the world. That's extraordinary, okay? And these are massive big tech companies with cash loads in the hundreds of billions, and they're doing this, right? Uber is laying off 3,700 and signals more cuts to come. Oobity booba. They have, 10 billion plus in liquid money sitting around, and they're cutting back like crazy. Not just like they're slowing down on hiring, they're completely stopping hiring right now and laying off massive amounts of employees. And these aren't like layoffs of drivers, because remember, drivers for Uber are, independent contractors. These are actual like people that work in the corporate office and things like that, okay? These numbers are extraordinary. The only company in big tech really that is hiring aggressively still is Amazon. Amazing's on. And the only reason Amazon's still hiring is because they're benefiting in a massive way by the move to online retail. It's just like, it was already a trend that was going, and it's just gotten, way bigger in this whole situation, obviously with a ton of physical retail locations being closed. So Amazing's on, they just have to hire. They have no choice, okay? I'm sure if they weren't benefiting in such a big way by just happening to be in the perfect place at the perfect time, they would not have hired just 75,000 employees like they just did. But they did it, and they're the only company you can really look at right now in the whole space that you're like, wow, they're actually still hiring, okay? Now, when you go through all those huge companies with amazing balance sheets that are super profitable, and they have hiring freezes, and some of them are doing layoffs, right? And never mind the smaller tech companies, we have gone through those, and they're almost all, hiring freezes or layoffs right now. Imagine what the local businesses are going to do, right? Which is a huge part of the economy, right? The local restaurant. I mean, do you think they're really going to bring back all their employees whenever they're allowed to open back up? Do you think that's very realistic? No, it's not, because at the end of the day, the restaurant's not going to be very busy, right? It's not like everybody's going out there and running out there and it's going to be packed restaurant as it was. No. So which means that restaurant's going to cut back on hiring, right? And some of these restaurants, a lot of them, they might not make it. And it's not just restaurants. I'm just using that as an industry example, right? When they open back up and they find, if they can get to that place where they open back up and they find their business is down 50%, 40%, 30% even, a lot of them just aren't going to make it. They're going to have to cut workers huge if they want to even dream about making it through, right? My city, Las Vegas. So this is where I live, right? And Vegas, they're talking about opening it within the next few weeks, okay? I'll be happy to drive around and see how things are. I can guarantee you it's going to be probably pretty dead, okay? It's going to be dead. You know, they can open back up, and yeah, some people will come. It's not going to be that many, okay? It's going to be a very small percentage that actually end up coming out here. The restaurants aren't going to be nearly as busy. Nightclubs, who knows if nightclubs will even be open? If you've ever gone to, you know, a crazy nightclub on the Strip, you know it's like, you know, you're jammed in like a bunch of sardines, right? The pools, you know, the pools are usually insanely packed in the summertime. Here in Vegas, it's like people are on top of people. I'm not so convinced that whole thing is going to go on, okay? So needless to say, they can open back up the Strip. Get ready for business to be down massively still. There's no way they're opening back up and it's just like, whoa, everything's crazy. It's, you know, I'll drive around, I'll make sure I'm that, but it's not going to happen, okay? Keep in mind what Warren Buffett, you know, arguably the greatest investor and one of the best businessmen of our time, he's not buying anything right now. The proof is in the numbers, right? You know, we can talk about opinions, we can throw about that, but what are people actually doing out there? We looked at the big companies. We look at Warren Buffett. He's not buying anything. He hasn't bought anything recently. With the market being, you know, lower than it was, he's still like, no, I'm good. All that money sitting around, and he doesn't want to throw a few billion into this stock or that stock. He sells out of all his airline positions at a loss. At a loss, somebody that has a, you know, a vision for companies that go way longer than probably you or I or anybody else watching this video, right? And he sells out of airlines, which means he thinks the industry will never be the same. And you might have a difference of opinion, and you know that's cool. Respect to you. But for Warren Buffett to sell out of that, things had to fundamentally change forever for him. And this is a guy that probably knows the airline industry better than any other, okay? He owns an actual private jet company, the biggest private jet company, which is called NetJets. Berkshire actually owns that, right? And he has ability to talk to all these executives, understand the airline business on a very high level. He thinks it's never going to be the same. He could be wrong. Maybe it bounces right back and everything's amazing. Or maybe it doesn't. And these companies are stuck losing money for a long time. We'll see a lot of bankruptcies in the space and things like that. We'll see what happens, okay? When Warren Buffett's not buying, after we've had a dip, you know, you'd be a little worried. Let's put it that way. With higher cash levels by far and away than they've ever had, they've added $100 billion in cash and short-term investments in the past 8 years in that balance sheet. And he's still like, I'm good. I don't want to buy right now. I'm actually going to sell. You know, that's something to take into account, okay? Corporate debt, more facts on facts, okay? Corporate debt is skyrocketing for most companies in the world right now. You know, the amount of companies that have taken out debt, issued bonds, issued shares, you know, drawn down on credit facilities. It's almost every single company out there. It's very hard to find companies that haven't done this. It's 90% plus of companies have done this. So essentially, if you're thinking about buying into any stock right now, you just got to understand the balance sheet's in a much worse place than it was previously. And that's almost every single company in the stock market right now. Almost every single stock in the stock market has a much worse balance sheet than if you had bought 2 or 3 months ago. And so you have to, whenever you're trying to think about a valuation of a company, you have to always account for the balance sheet. And the fact is, the more debt a company takes out, right? The more debt they take out, the more debt they have to pay off of, which means you get less dividends, or the company can, you know, not reinvest in the business as well. And especially a lot of these companies have taken out some pretty high interest debt. Yeah, interest rates are very low right now, but a lot of these companies have had their you know, debt downgraded and looked at like junk bonds and stuff. And a lot of them have had to, you know, get interest rates that they're going to have to pay at 7%, 9%, 11%. Just because Apple might be able to raise money at 1% or 2% doesn't mean a lot of these other companies can. They just can't. So the fact is, corporate debt is at sky high levels. It's the highest it's ever been right now, literally right now. I mean, the numbers are going to be staggering as we see over the next few months, and that might not be done, by the way. Corporate debt could continue to possibly rise. That's something we're going to have to keep an eye on, okay? So, with all that being said, like what we just went through is bad news on bad news on bad news on bad news on sad news on bad news, okay? And so why are things holding up well? Why is the stock market holding up well in this whole scenario, okay? 3 reasons, in my personal opinion, why the stock market is holding up pretty well. And I put a lot of thought into this. Well, one is the obvious one, right? The Fed is flooding money out there in the market, right? They're not necessarily flooding money directly into the stock market, but what they're doing is they're basically not allowing most of these companies to go out of business. They're buying bonds in mass, and it pretty much doesn't matter what it is across the board. They're doing everything possible. They're trying to force banks to give loans to small businesses, mid-sized businesses, any business in general, just to get them through. So what that has done, essentially, people want to think it's just like the Fed's just plowing money in the stock market. It doesn't work like that. But what it has done is it's made investors hedge funds, a lot of the individuals that have a lot of money, a lot of the big ETFs and funds in general, they're looking at it and they're like, they're not scared. So essentially, there's a situation going on right now where investors aren't scared because they're like, oh, the Fed's going to backstop it anyways. Oh, this company's not going to go bankrupt anyways. Oh, things could only get so bad because the Fed's backstopping everything. And by the Fed backstopping everything, it definitely does help. But I can just tell you, we'll get into the other part in a little bit. Okay, we're only going to talk about right now why the market's holding up well. Second reason is inflation fear. So a lot of investors have real inflation fears right now. Obviously, with the quote unquote printing of money, right, and just the Fed flooding money in the market. You have the government sending out checks left and right, right. A lot of people are worried about inflation fears. So they're essentially worried that the dollar is going to become worth less and less and less. Okay, so if you're holding $1 million in cash, let's say, in a few years, it might only really be worth $750,000 or something like that because the dollar could just depreciate over time. And so when you have a situation like that, some people that have cash are like, I got to get in the market because if inflation goes up, asset prices usually go up. And so they look at the stock market as a place to hopefully, hey, if inflation happens, my money's going to become worth more in the stock market because that's just usually what happens when there's inflation. Usually all assets get more expensive. Homes get more expensive. The stock market gets more expensive. Just assets in general get more expensive. So that's a way you have a lot of investors looking at it. And then the third reason is hope. A lot of investors are just riding on hope right now. They hope that the economy opens back up fairly soon, and they hope when the economy does open back up, that it will be a robust economy and the hiring will get back and unemployment rates will come down massively and things will get back on track very, very quickly. Now, that's a hard thing to believe, but the fact is there is definitely an investor base out there that is investing right now and is still buying this stock market after it's bounced so much and with all the uncertainties, they're just riding on hope. And, it's not bad to ride on hope if you're getting silly prices in the stock market. But here's the thing. The S&P 500 is down 11%. The Nasdaq's down 0.7%. The fact is, you're not really getting silly pricing on these stocks. You're really not. You're not getting silly pricing. So, if the stock market was down 50% right now, 60%, buy on hope because, the risk reward is very attractive. When the market's hardly down, with all the uncertainty, real uncertainty, that's a dangerous time to buy on hope, okay? Now, what will it take for a summer 2020 stock market collapse to actually start and actually happen, okay? What's it going to take to actually get the stock market to go down, okay? So in my opinion, there's two things that could start this. The first one being truth coming out, okay? So essentially, imagine the economy starts to reopen, over the next, few weeks or the next month or so. And imagine we start to open all across the United States and worldwide economies open back up and everything's really technically open, okay? And then imagine when the truth comes out and these businesses aren't even close to 100% of what they used to be, revenues, profit-wise, for most of these businesses. Let's say 80% or 90% of the stocks in the stock market. Once the next quarter's reported and these companies say, hey, you know what? Business is down 60% in our stores. Hey, business is down, 40% in our restaurants and things like that. When the actual truth comes out, there's no more hiding. There's no more there's no more that hope game because then you know the numbers and then you know what you're looking at. And then what ends up happening, basically happening is, S&P 500 analysts have to start downgrading essentially what they think these companies can do. They have to start lowering their earnings expectations for not only this year, but next year. And then you start kind of really getting the fear rolling back in the market where essentially, a lot of investors looking at dang, I own this stock right now. And we're in a situation where their earnings could take 3 years to get back to where it was, or 4 years, or 5 years, or maybe it never does, okay? And as long as the market's holding up good in terms of pricing, those thoughts don't go through investors' minds. But as soon as you start getting some sell-offs, that's when those thoughts start going through investors' minds more and more. It doesn't matter if it's small investors, big investors, or something in the middle, okay? Everybody starts to take that into account. And as the sell-off gets worse, you start getting the dominoes to fall the wrong way, and you start getting a lot more people to say, you know what? Yeah, what am I doing in the stock? The earnings are going to be down. The stock's probably going to go down for the next year or so. Let me get out. And so outside outside of us having a truthful situation where the economy looks really strong and corporate earnings look really strong and they're going to bounce back in late 2020 into 2021, outside of that scenario, that could definitely start, some type of stock market collapse in the market, okay? The other thing that could start it is if Rona takes off again, okay? So imagine the economy starts to open back up, and imagine the numbers for Rona absolutely take off once again, and it starts spreading like crazy. That is a scenario that could definitely take the market down, because then there'll start to be talk about, are we going to close down the economy again? And if we do that, that would just be, the nail in the coffin really for the stock market and for, the global economy for many, many years. Let's put it that way. Because that would just create such a traumatic experience just for the markets in general right now. And if you think the Fed's balance sheet is big right now, which the Fed's balance sheet has, absolutely gone up like insane the past, basically since Rona took off, it's I guess 6.7 billion or 6.8 billion. Wait to see what it goes to if Rona takes back off and we have to close the economy again. The Fed's balance sheet will go to tens of trillions, okay? It will go to literally tens of trillions. They would do everything in their power to just flood money out there. Government would have to send, checks to everybody's homes on a whole other scale to basically pay for everything for a year. It would create such a dramatic experience that, let's hope that doesn't happen. Let's hope the Rona doesn't take back off. But if it does, that is definitely something that could, cause the stock market just to go, okay? No, and one thing I want to bring up real quick, a lot of people assume that in regards to Rona, and people, let's assume the economy opens back up, the restaurants open back up, sporting events open back up, Disneyland opens back up, and all those sorts of things, right? Some people assume, I'll go out still, and other people will go out because some people aren't scared of getting the Rona. But here's the thing here. Some people don't just think about it in regards to themselves. Some people think about it in regards to, at least with talking with friends and family and other folks in general, some people are worried that if I go out and I get Rona, it's not just about me, but what if I get my parents sick? What if I get my kids sick? What if I get my wife sick? And things like that. And that's the way a lot of people think. And that's why I think this whole scenario with the economy opening back up, I think it's hard to believe that things are going to bounce back super strong, because you have a mass amount of people that are really literally scared to go out and do anything because of Rona, because they don't want to get it. And then you have another big portion of people that are scared that they'll get it and then give it to somebody else in their family who, could be at risk. And so, it's just going to be an ugly situation for a while, in my opinion. But those are definitely two scenarios that could start this, okay? Now, I said I would throw in a bonus to you guys about shorting the market, okay? Because I know a lot of people are wondering, should we start shorting the market? Should we start buying put options? The market's crazy right now. It just keeps going up, and the Nasdaq's hardly down. There's massive risk out there. There's possibility, many things could go wrong in this scenario, and the market's pricing in a lot of good news. And I just want to say, you got to understand who you're fighting in this scenario. You're fighting the Fed, and the Fed is a tough fight, okay? And that's why it makes it so hard to short this market. And I've never even really had thoughts ever about shorting the market. Let me be very clear about that. But the thoughts have even gone through my mind. Somebody that's, been called a perma bull in the past, and somebody that has the majority of my wealth invested in the stock market, I've even had thoughts about it. But man, it's a tough fight when you're trying to fight the Fed. It really is, guys. It is a really tough fight. I mean, so at the end of the day, I feel like, it could be interesting, but I can't do it. I just can't do it because I don't want to fight the Fed. But the one thing I will say is a Fed can't make people go spend money. So the Fed can backstop a lot of things. They can buy bonds. They can, help these companies get through. They can try to force banks to give loans and things like that. But at the end of the day, the Fed can't make me go to the restaurant if that restaurant's open down the street. The Fed can't make me go to the football game if I can go to the football game, right? The Fed can't make me go on vacation and get on a plane and travel somewhere. The Fed can't make me do that. I can have all the money in the world, right? I can have $1 billion. If I don't want to go because I'm afraid of getting the Rona or getting the Rona and giving it to somebody else that I love, right? I can't go spend that money. So that is something to take into context. But I think, shorting the market it's dangerous. Even though it looks like one of the most attractive times maybe in history to do it, it's honestly too dangerous. And remember, this saying is a famous saying, okay? The markets can remain irrational a lot longer than you and I can remain solvent. And that's something to think about. Obviously, it looks intriguing, shorting the market, but I just say, it's too dang dangerous, okay? It's too dang dangerous because there's unlimited losses on the other side. And one, we could be wrong, and two, even if we aren't wrong, still the market could go up. It's just facts. It's just the way it works. And so I just say it's very dangerous. And if you're actually considering shorting the market or buying put options or something like that, like just make sure you fully understand the risks before you ever even think about going that route, because that's a dangerous, dangerous game to play. So I'll just leave it at that, okay? So I hope you guys enjoyed today's video. As always, don't forget to smash the thumbs up button. We're going for 2,118 thumbs up in the first hour. I think we can accomplish it. It would be an all-time record. Thank you for watching and have a great day.